Hi traders, it's Oren here from 8Cap, Head of Sales, and I would like to actually do Trade of the Week again. For the past week in markets, it was pretty lame, to be honest. There wasn't actually much unfolding, unfortunately. All the major currency pairs against the USD were subdued, and they were actually mainly flat, with an exception of Aussie dropping 1.2% against the USD. So USDXY, or US dollar versus all the major currency pairs, appreciated a little bit, but nevertheless, it wasn't actually anything major that brought everyone's attention. Now, Friday was actually different. So last Friday, we've actually seen quite a punchy move, and that was in USD Japanese yen. So today I would like to actually talk macro levels on USD JPY, or Trade of the Week, but also dig a little bit into the technical side of things and finish off with the key economic events for this week as well, because we've actually got quite a busy schedule for this week, which should or potentially could move the market quite a bit. So how about we start with USD JPY? So on Friday, we've seen ultra dovish comments from the Bank of Japan Governor Kazuo Ueda. That inspired USD Japanese yen bulls to rally, and we've seen a punchy 300 pips move to the upside. As you can see, last week green bars, or second last green bar on the chart, there was a very, very aggressive move by USD against the JPY. Also, rhetoric on easing the monetary policy if required, that also got yen jittery, and as a result, obviously, it faced all the dovish prospects. So US dollar also actually gained a bit of strength last week following positive earnings from big tech companies, as the market also starts placing bets on 25 basis point interest rate rise in May. So that's actually happening later this week. So as a result of all this, USD actually gained a bit of strength against some of the majors, and in particular against the Japanese yen. If you have a look at the chart, we can see that dollar found support, or was actually flat from $130 level back in end of March. It found a nice bottom there, higher trough, and started moving upwards nicely in a bullish channel. Now, that channel is actually just been broken through with this morning's continued run on the US dollar, and it looks like the next major resistance level is at $138 mark. So that's the key resistance level for the US dollar, and any halting around these levels could provide a bit of sellers, or maybe a bit of dovishness on US dollar and consolidation. But nevertheless, the major level here would be 138. The pair needs to break up that previous peak that's actually created on 8th of March. So break above that 138, and we could see USD continue marching upwards further to maybe $145 to $147 mark. USD is actually, whilst it's gaining a bit of strength at the moment, it's also got quite a big news ahead in this week, and in general, it will be quite an important week in the markets, because there is actually quite a lot of news with regards to the consumer price index or inflation. There is also quite a few banks that are actually also meeting as well and talking about the further interest rate rises. The last point that I would like to mention on this chart before I actually go into the week ahead is the fact that we are seeing a 200-day moving average as well. So USD is just approaching that. So that will be interesting to see whether it can break above and continue the upside run. Overall, from the 16th of January low, we can see that nice steep upside on USD. Obviously came back and retested the support level, and now it's actually continuing to march upwards. So watch out this space. JPY has been actually the worst performing currency over the last week, and it dropped altogether approximately 1.59%. So yen is been very bearish, whilst USD, on the other hand, has been actually quite bullish. Now, let's go into this week and see what is the key driving events. If you log into the 8Cap client portal and click on economic calendar, you will see Acuity calendar pop up. Very popular at this point in time with our traders. Let's see what will drive the markets for this week. So we've got the ISM manufacturing PMI data that's actually coming on Tuesday. Wednesday is a busy one as well locally around Australia, because New Zealand is actually having unemployment rate. Thursday, we've got further ISM manufacturing data as well. And Friday, we've got non-farm payroll data. Also on Thursday and Friday, we've got the European Central Bank who is actually meeting. The current rate is at 3%, and its market is already actually taking into account or basically advising that there should be another 25 basis point interest rate rise. Non-farm payroll data coming out on Friday, so that's going to be a major news event. And on Wednesday night as well, we've got the Fed meeting up. So right now the terminal rate is at 5%, and market is also factoring in another 25 basis point interest rate rise. So Jerome Powell is actually advised last month that in fact this should be one of the very last interest rate rises. So as you can see here, the terminal rate should end around 525 basis points. Obviously, that would also depend quite a bit on the rest of the data that we actually see, economic data, over the next few weeks, but it does appear that we are peaking at the moment in terms of the terminal rate, and it should be around 525 basis point. Also, just to mention on the local front as well, here in Australia, tomorrow we do have interest rate decision as well, and RBA is perhaps or potentially could keep the rates on hold at the moment. So any surprise or interest rate rises would actually probably add bulls on Aussie against the USD. So that's pretty much it for this week. Happy trading. And if you do have any questions, please feel free to get in touch. All the best. Thank you.